So we move on. For unusual balance, normally your debtors control account should have debit balance and your creditors control account should have a credit balance. But when there's an unusual balance, this occurs when the creditors control account is having a debit balance while the debtors control account is having a credit balance. I said earlier, the debtors control account should have what? The debtors control account should have a debit balance, while the creditors control account should have a credit balance. But there's an unusual balance if your creditors control account is having a debit balance and your creditors control account is having a debit balance. Your debtors control account, if it's having a credit balance, it means an unusual balance. If your creditors control account is having a debit balance, it means an unusual balance. You get it? So, what are the reasons for credit balance on the debtors control account? Why do we have a debit balance in our creditors control account? Number one, if a payment has been received from a debtor and later goods were returned. So, your debtors paid you and there's return inward. They paid you and they returned the goods back to you. So if they've returned the goods back to you, that means you have to refund them. In the course of refunding them, that's going to be what? A debit balance. Does it make sense there? An error has been made involving an overpayment by the debtor. The debtor overpaid you. If the debtor overpaid you, it simply means you are owing the debtor. There's going to be what? A credit balance for the debtor. The third one, after full payment was received, a discount allowed was applied for. So you gave your customer a discount after receiving full payment from your customer. That means you are owing your customer. That will bring about a credit balance. So these are the three reasons why we have a credit balance on the debtors control account. The first one, payments received and there's return inward. The second one, the customer overpaid you. The third one, there's a discount given to the customer after making full payment. So these are the reasons why you are owing your customer. Any question about that? Now, reasons for debit balance on the creditors control account. Why will your creditors control account have a debit balance? Number one, a payment has been paid to a creditor and later goods were returned to the creditor. You paid your supplier, and having paid your supplier, there's a return outward. You return some goods back to your supplier. So that means your supplier is owing you. That will bring about a debit balance in the creditors control account. You overpaid your supplier. If you overpaid your supplier, it means the supplier is owing you. It will bring about a debit balance in the creditors control account. The third one, after full payment was made, a discount was received. You make a full payment and there's a discount given to you. Discount received. So that means your supplier is. These are the reasons why we have debit entry in the creditors control account. Do you get that? I'm going to say it again. Reasons for debit balance on the creditors control account. Number one, a payment has been paid to a creditor and later goods were returned to the creditor. Return outward. That means your creditor has to refund you. Your supplier has to refund you. It's owing you. Because your supplier is owing you, that is that's a debit balance in the creditors control account. You overpaid your customer. You overpaid your supplier. It means your supplier will be owing you a refund. Debit balance in the creditors control account. Discount received after making a payment. After making a full payment, your supplier now gave you a discount. You bring about a debit balance in the creditors control account. I think that is clear. Is it clear, please? Is it clear enough? Now we have contra. For contra, a contra item arises when a debtor to the business is also a creditor. So we have contra entry because the debtor to the business is also a creditor. I'm owing you. And at the same time, you are owing me. There's a contra entry. Does it make sense here? Do you get it? So look at it this way. I'm owing you. At the same time, you are owing me. So there's going to be a transfer. So the transfer done is called contra. Do you get it? So we have the format for debtors control account. So the format for debtors control account, this is the format for debtors control account. So I'm just going to read it out. The debtors control account. What? Okay. For the debtors control account, on the debit side of the debt control account, we're going to have the balance brought down, the credit sales less cash sales, the interest received, dishonored check, and the debtor's credit balance. On the credit side of our control account, we're going to have balance brought down, discount allowed, return inward, payment received, bad debt written off, bills receivable, and the transfer, the contra entry. So whatever we receive from our customer is going to be on the credit side of your debtors control account. Whatever we give to our customer is going to be on the debit side. So credit sales, you sold to your credit customer, you sold to them. So it's going to be on the credit side. Interest is going to be here. Interest charge, this is interest charged. You charge interest. Are you with me, please? Mm-hmm. You charge interest. When you charge interest, that means your customer is owing you more. So you charge interest on it. Dishonored check. A check that was dishonored. So these are all that's going to be on the debit side of your control account. Then, and the debit side of your, the debit side and the credit side of your debtors control account. The balance, the credit sales, the cash sales, you take away the cash sales, interest charge, dishonored check. On the debit side, you're going to have discount allowed, payment received, bad debt written off, transfer, returns, bills receivable. Now, on the credit side of your, on the debit side and the credit side of your creditors control account, we don't have it here. I think I have it, okay? So for the creditors control account, you're going to have, on the debit side, you're going to have purchases returns, discount received, payments to creditors, bills payable. The credit side of your debtors control account is having contra. So the debit side of your control account will have the debt contra now. And on the credit side of your debtors or of your creditors control account, you're going to have discount disallowed, credit purchases, bills payable dishonored, check paid, own check paid dishonored, and the closing balance. That's all you're going to have on the credit side. So look at here. We have so we have a question here anyway. So let's do this question together. So we have a question for this. We have debtors ledger control account balance. So let's find it out here. It said, let me show the questions to the audience. So we have a question here. For debtors ledger control account, so I'm just going to state how we put it, where the debit entry is going to be and the credit entry. So we have, so first I'm going to prepare the debtors control account. So the debtors control account will have, in the debtors control account, this is going to be on the debit side. This is going to be on the debit side. This is going to be on the credit side. Then this is creditors control account. This is going to be on the credit side. And this is going to be on the debit side. We have discount allowed. This is going to be on the debtors control account. Discount received will be creditors control account. Purchases, this is going to be on the credit side of the debtors control account. Sales return will be on the debit side of your debtors control account. What we have again, that's return inwards. Discount disallowed will be on the, so we want to do the debtors control account first. So let me do it that way so it will be easier. So we want to prepare the debtors control account first. So to prepare the debtors control accounts, for debtors control account, so this is going to be on the debit side of the debtors control account. This is going to be on the credit side of the debtors control account. Discounts allowed is going to be on the debit side of the credit side of your debtors control account. Sales returns will be on the credit. Now we have sales, including cash sales. So we're going to take 212,000 away from 23,100. It's going to be on the debit side of your credit debtors control account. Return inward will be on the credit side of your debtors control account. Interest charge will be on the debit side of your debtors control account. Payment received will be on the credit side of your debtors control account. Bad debt written off will be on the credit side of your debtors control account. Dishonored check will be on the debit side of the debtors control account. Transfer from debtors ledger to creditors ledger will be contra entry, and it's going to be on the credit side of your debtors control account. Bills receivable will be on the debit side of your debtors. Bills receivable will be on the debit side of your debtors control account. Then we have the balance. The debtors balance debit is going to be on the credit side. So that's how to prepare the debtors control account. Now for the creditors control account, the creditors control account, we're going to have this on the credit side of your, we're going to have this on the credit side of the creditors control account. This will be on the debit side of the creditors control account. Then we have discount. We have discount disallowed. Discount disallowed. This is going to be on the debit side on the credit side of the creditors control account. Payment made to suppliers is going to be on the debit side of the creditors control account. Transfer will be on the debit side of the creditors control account, and the balance carried down will be on the credit side of your creditors control account. And that's how to prepare debtors control account and creditors control account. The benefit of managing household daily financial benefit of, okay, let me see this. Okay. So, do you understand that, huh? So, yeah, the question says, sir, please tell benefit in managing household daily financial work. Well, when you manage household daily financial work, the benefit of managing household daily financial work, it's when you are able to manage it, it means you'll be able to make informed decision. That's number one. You'll be able to make informed decision about your spending. And it also allows you to be accountable for whatever you do. So that ends the live session anyway. And thanks for those who viewed.